Well, looks like rates are going to keep going up. Chance that variable is going to go up. We need to start asking ourselves an important question now that we're 18 months down the road of these constant rate increases. The question is, will people have to sell their homes? Now, statistically, not so much, and maybe not at all, because we've gone through this before. We had the big energy crisis in Alberta in 2015. Many people laid off. It was a terrible economic time in Alberta. And the default rates weren't big. Some people did have to sell, but it wasn't vast and unmanageable. But will more people have to sell their homes based on constant rate increase, big renewal increases? Let's think about this by telling a story. I had a long talk with a customer just over the course of the last 2 days. This is a person who took out a large mortgage. He had a big house, big job, big salary, big mortgage, $1.2 million on a $2.3 million house. And took out variable because at the time that seemed to be the right move. It's over 2 years ago. Variable was the rage. Everybody's taking variable. To qualify, it's the crazy thing the government did. With the way the qualifying rate worked, it was actually favorable. You could get more mortgage with a variable. So whenever you think people were just making a mistake getting variable, nobody should ever forget the government's involvement in it. When you kept the qualifying rate for the variable lower than the fixed rate, you were encouraging people to take the variable. Never be fooled by this. It's the truth. So what's happened down the road? Well, his rate went from 1.2 to 6.2, and that's terrible. And his payments have gone through they haven't gone through the roof. He had a static payment variable. What does that mean? That means even though the rate goes up, the payment doesn't. The payment can stay the same. Sometimes the payment will stay the same right through the trigger rate. But let's talk about what happened. She knew that it was getting to the point where her mortgage was growing. Like if the interest goes too high and the payment stays the same, eventually the interest overtakes the payment. So here's where we're at. From a payment that was quite manageable, she raised her payment voluntarily because she was frightened by the concept of the mortgage growing. She didn't want it to happen. She moved the payment up, and she's at the point now where she's paying $6,600 a month on the mortgage. She's trying to figure out any way to manage this problem because she realizes if there's another increase, or most importantly, and this is interesting, she also realized that come January, when everybody's payroll resets, because she's a high salary person, when everybody's payroll resets, she'll start having to pay her EI and her CPP shares again in January because it's over now. It's the fall. Typically, a lot of people, that's finished paying sometime in July, August, September. But she's finished paying it. So she finds the $6,600 a month tight, definitely tight. Budget's tight because like groceries are more expensive. Everything's more expensive. Gas is more expensive. Everything's more expensive. She calls her bank to say, there's got to be a better way here. I want to start paying down my mortgage, and I need to find a better way. And I read the articles. I listen to the podcasts. I understand. She called me. The banks have committed through the Minister of Finance. Krista Freeland said, we've got a financial services watchdog in this country who's going to encourage banks to try to help people out when they get in these unmanageable situations on variable. She went to the bank and said, okay, so I want you to try to figure out an option for me so I can start paying down my mortgage. And there's a bunch of back and forth, a little bit of argument, a little bit of running around in circles. Finally, she got to talk to the right person. The right person said, yes, you could qualify to go for as high as a 40-year amortization. Now, folks, listen to me. That's not available right now. I mean, you can't get a mortgage and ask for 40-year amortization. It's impossible. You have to be in this situation. You have to be in the situation where your payments have gone through the roof due to the variable rates going up, and you just have a big problem managing it. But here's what she found out. even though she was going from 25-year to 40-year amortization, but remember, her payments had not gone up enough to cover her mortgage. She was just breaking even on the mortgage at the time. She was just paying enough just to cover the interest, effectively interest-only mortgage at $6,600 a month. She found out that the 40-year amortization was $7,014 a month, 7014. So she said, that's crazy. I want to pay my mortgage down, but don't want to pay more. I can barely pay what I'm paying now. And come January, when my EI and my CPP portions kick in again, I'm going to be in worse shape than before. So this is important to understand, folks. People are going to get renewals at a significantly higher rate, maybe double the rate that they're paying. People are going to see 40, 55% payment increases. They're going to go to their banks and they're going to say, I can't manage this. But when they find out what all the emergency measures can do, 35-year amortization, 40-year amortization, they're going to find out it doesn't quite change the payment enough, particularly for those variable rate renewals. So the end of my story is this. Will this endless increase in mortgage rates and prime interest in Canada finally start to drive people to sell their houses? I think the answer is a qualified yes. Not in huge numbers, but a qualified yes, it will happen.